Hello everyone, welcome back to mForex channel, and I'm Ming. Many technical tools have been developed to take the advantage of support and resistance level in the trading market, and this makes them one of the most widespread trading strategy when trading in the financial market. If you are the beginner here, understanding the concept of support and resistance level should be your number one priority. This is because many advanced trading strategies rely on the most basic support and resistance levels. So let's get started right now. Firstly, we should find out the definition of support and resistance level. They are areas that previous price direction may change. The support area appears when demand accumulates and buyer activity prevents the price from decreasing, and in contrast, the resistance areas appear when supply accumulates and the seller activity prevents the price from increasing. One of the three main scenarios could be realized in the resistance and support levels areas: bounce, breakout, and consolidation. Secondly, the support and resistance level could be identified in many different ways. So here we will consider 6 of them. Let's discuss for more in detail. The horizontal support and resistance levels. They are the most basic type of these levels. They are simply identified by a horizontal line. You need to spot a past price level that the price had difficulties to break above or below this level. For example, when a price zone is formed, there is a consensus between the buyers and the sellers, which means that the buyer assumes that the 1.52962 is a reasonable price to buy, and the seller also finds that price is a reasonable price to stop selling. When both of them agree that the price was the bottom, which would prevent the price from being pushed lower, so-called the support level was formed. By this point, the late participant will regret that why they didn't realize this key level, and they will hope that the price will come back to this support area, because now they know that this is an important area. And if here the consensus between the buyers and the sellers continues to believe in this for a while, the price from here can continue to be pushed higher. In contrast, if the bulls now think that price is too high, they want the price to be lower, so they will wait for the price to drop below this level, the 1.52962 to buy back, and this will make this area no longer be a support area. As the traders tend to put their stop levels or profit target around the round number, increasing the number of market orders executed around this level. There are horizontal lines draw at the round number exchange rate, such as 1.0, 1.10, 1.20, 1.25, etc. Another feature of support and resistance lies is that the price of an asset can have difficulty setting round numbers. I have an example here. When the price is at 1.0001, inexperienced forex players tend to buy or sell assets when the price scales fully, because they felt that an asset class is well priced at that level. Investors place orders at round prices instead of at 1.0268. Because so many orders are placed at the same level, these rounded numbers tend to act as a strong price barriers. And if multiple traders place a sell order with a suggested target price of 1.0001, A very large amount of buy is required to absorb these sales. Therefore, the level of resistance will be created. Trendline support and resistance level are not drawn by horizontal lines, but by a trend line which can be an upward sloping or the downward sloping. Each time the price approaches towards the trend lines, there is a high chance that price will bounce off that trend line. Just like with horizontal support and resistance levels, the trend line should have at least 3 price touches before it is considered as an important one. Similar to trend lines, you can use channels to identify support and resistance levels. So here I have some examples for you. This is an uptrend. We have a higher highs and higher lows. Next, this is a downtrend. Lower highs and lower lows. Well, you can also use a channel like the candle channel to find down market trend as well as key level like this. For the Fibonacci support and resistance levels, the Fibonacci retracement tool is an extremely popular tool used to identify price level where price correction might end. This leads to the continuation of underlying trend. Price correction are counter trend price move during uptrend and downtrend, which give price chart their characteristic like a zigzag pattern. And here traders believe that the golden ratio can be used to measure the extent of price correction in the market. The 61.8% Fibonacci retracement is believed to provide important support or resistance level in the price. In any case, practice shows that the market tends to respect the 61.8 Fibonacci retracement, including other variations of Fibonacci ratio. And number 5, the dynamic support and resistance levels change their level with each new price tick. The 200-day exponential moving average, the 100-day EMA and the 50-day EMA are very popular dynamic support and resistance levels. EMA act as the dynamic support and resistance level. This is the EMA 50, and each time the price touches the 50 EMA, this will be act as the resistance to push the price go back. Most prices bounce back on their own every time they touch the EMA. 6. The TPO and the profile adjustment. It is formed in the course of trading session development, and only the indicator position in the chart could be fixed. If you monitor the profile information from the beginning to the end of your trading session, you will be able to see the movement of the maximum volume level, the pressure of the sellers or the buyers, and how the price is attracted, which trader considers to be fair. So here are all the information I want to share with you in this video. Thank you for taking your time to watching my video, and seeing you in the next video. Thank you.